Good. Now we're live. You there?
Yes, sir.
Okay, so I'm going to introduce you, Gary, as Gary Lockwood. By the way, just to let you know, Gary, I looked up an email here and I found that your first point of contact with me was me reaching out to you on March 15th, if you can believe it, of 2012, which would have been, my God, almost 14 years ago that
That
the two
sounds
of
about
us
right.
met.
I was
And
sitting
you
on my
were,
desk at Park Avenue South in Merrimerch, and I remember the conversation sitting next to David Goldberg. I can remember it sitting exactly where I was sitting, exactly what I was doing.
one of the greatest logos to this day in the industry that there was, period. Agreed?
I agree. There was a lot about that company that was greatest in the industry and first in the industry, led by one of the leaders and legends in the industry, David Golden, who without him, there really may not be the industry as we know it today. As he took on the giants of the industry and won a lawsuit that he was never expected to win, where another company tried to trademark the collection method of using credit card processing receipts. David, was able to prevail on that and open up the industry and really, so, I feel very fortunate to have learned and for that to have been one of my first experiences working at a merchant cash advance company.
So he took on Advanced Me, didn't he,
He
in a
did.
civil suit?
He did.
And wasn't he able to get Lytle and Company and a couple others to join him also?
As it was a few years ago, I don't remember the specifics of who joined him, but there were certainly other names in the industry for anybody who's been around for a long time that they would know who did join him and was successful. And even though American Merchant in its past form is not around anymore, it does continue, believe it or not, in Europe, funding in England and in Australia under Capify.
Oh, really? I
Yes,
didn't know that.
yeah, for several years now. I think American Merchant exited the U.S. market. I'm going to say it probably wasn't exactly 10 years ago, but pretty close.
Now, is he still associated with the industry at all, or is he
Oh, indeed.
retired or gotten out?
No, no, he's actively running Capify. I couldn't speak too closely to that because although while I am in touch, I would not say I have anything, I work with Capify on any level, but, I do see updates. They're super successful, very well run. Wouldn't expect anything else.
Yeah, I've heard of him. I don't, I've seen him at the shows too. I don't say hi to anyone when I'm there. So I don't introduce myself. I just, even when I first saw you at a show, I didn't introduce myself. I always kept this West Coast mentality of
Yeah.
that I wanted to be separate from being influenced by New York companies because they had such a lock on the industry. And in my mind, what I wanted to do was be someone associated with the industry, but at the same time not be 100% influenced by it. Because if you recall, you guys were not that bad, but somebody like a Yellowstone, as an example, they had 30 and 60-day calls on those loans or advances.
Yeah,
Remember
so
that?
I started at Amerimerch in 2010, and when I started there, the subordinate, the second, the sacking position really was not a factor in the industry. So companies
Yeah,
like
me neither.
yeah, so
Yep, yep.
Yellowstone and other companies out there did start the trend to be able to fund second, third positions, which really has opened up the growth in the industry. So there's good and bad with that, right? It's gotten a lot more people into the industry, a lot more people funded. So, it's had its good and bads. But when I first got there, collection method was strictly from credit card receipts, either from the credit card machine itself or through a lockbox. And then a few years later, as On Deck pioneered the AC collection method out of people's business bank accounts, Merchant followed suit with a similar program out there. So, I was lucky, and if you'd like, I can go through my history in the industry a little bit.
Yeah, I'd love to. In fact, I was gonna ask you that next. Before you do, though, you
Yep,
brought up something real important there. Let's go back for a moment and talk about what I used to call the 3 and 3, 3 credit card processing statements and 3 months bank statements, and then you and I had to deal with the lockbox. You wanna explain to everyone what a lockbox was from your end?
sure. So what happened was if the funder was not able to connect with the credit card processing company and divert directly, let's say, from the merchant's terminal to the merchant cash advance provider, they set up what's called the lockbox. All a lockbox was a secondary business account for the purposes of collecting a merchant's credit card processing receipts where the funder had access to that. So let's say that the the credit card processor collected $1,000 that day. That money went to the lockbox, and let's say 100 of that was due to the merchant cash advance provider. The other 900 would go back to the merchant. So it was a stopover account that gave people the ability to, get their deals funded if a split directly from the credit card processor wasn't available. Now, the good and bad with that is it allowed people it allowed it was good for funders because they were in front of the money, right? They didn't have to worry about their payments bouncing. In some cases, it did add a day or 2 to the availability to the merchant. So if they were used to getting their weekend credit card receipts on a Tuesday, they may not get them until Wednesday or Thursday. So it took a little bit of explaining to make sure that the merchant that the proper expectation is set for the merchant for that. There are some companies that still do it. I'm not sad that it's not the standard anymore, you
Yeah.
know? So, that is what a that's essentially how a lockbox functions. The merchant did not have access to the account. The funder had access to that.
Well, that's the whole reason why Barbara Johnson got into the industry or invented it, her and Gary, from what I remember, and that was that they were sick and tired of waiting around for 5 to 10 days for the credit card money or ATM money that had been, you know, a card that had been used
Yeah.
to purchase something with an ATM or a credit card. It would take the merchant anywhere from 5 to 10 days to get that money, and so
Yeah,
I remember that.
so the industry started somewhere in the '90s. I can't say I was a banker at that time, a commercial banker. So, wasn't I kind of fell into this industry. Yeah.
Yeah, I see stories about her from 1998 and 1997, so I don't know what one's accurate. Seems like everyone has an opinion. I've got a real close friend from when Strategic was Strategic prior to Capitus. I'm
Yeah.
sure you know Jim D'Alessandro.
I did have the
And
pleasure of meeting Jim several times, yes.
yeah, and Jim and I've talked about it. And he actually was working with Alan Nussbaum and a couple other
Mhm.
people over there at Advance Me at that
Yep.
time during those initial years, and they
So,
talk
I
about they talk about banner years when you and I were in the banking industry and the mortgage industry, and you and I were having banner years right up to 2006.
Yeah, so if we back up a little bit, I was a commercial banker from around 1998 until 2008 when myself and a lot of other people were let go, not due to any performance issues, but any people who are watching who are old enough to remember, there was a significant downturn in the economy, a recession. A lot of people lost their jobs, myself included. So I was a commercial banker. I was doing loans up to $20 million probably, right? Most of them were still smaller loans, but able to write bigger loans. So when I exited the bank, I had several customers who were either waiting for their loans to be approved or, believe it or not, their lines of credit were getting termed out. Here's what that means. Say you have a $100,000 line of credit and you have $40,000 access. the banks had to deleverage. So they said, guess what? We're taking away the remaining availability of your line of credit. We're going to term out the amount that you have, and you have no more access. I had a hibachi restaurant that needed $75,000. Their loan got termed, their line of credit got termed out. They were one of my customers. And believe it or not, the first place I ever did an advance, probably 2007, 8, somewhere around there, I don't remember the exact date, was through strategic funding source to people I think that are there to this day, Raul Rodriguez and Lady Torres. I remember them because I did my first advance with them. And, I had a good relationship with them. So I fell into this industry. I didn't know anything about it. And then once I did that, I'm like, hey, I guess this is what I'm doing now.
Now, how did you find them? Did you just find them in Yellow Pages?
So
Anything on the internet?
No, I found them by accident. So when I was looking for an opportunity, when I was looking for a job, I was connected with a credit card processing company. So I was doing some work for a credit card processing company who introduced me to merchant cash advance almost immediately, like within a week after I was done at the bank. And Strategic Funding Source was the company that I was introduced to. So I got to know them, and I'm like, right now this is very valuable. And so from there, I started brokering SBA equipment and working capital transactions for a couple of years. And then I was fortunate enough to secure an opportunity working with a mirror merchant, or working for a mirror merchant. I think it was sometime early 2010 I started. So at that point, it was a big deal because not a lot of funders were hiring brokers to come in, and work for them. So I learned the industry from some of the best people there, and I was there for several years and had a great time there. I have friends to this day, people I work to this day. When I left there, I went to a term loan provider for 2 years. And from there, I really kind of went out on my own for a couple of
Terminal
years.
provider meaning credit card processing machines?
No, a term loan provider, a company.
Term loan.
Term loan.
Gotcha.
Term loan provider,
Yeah.
So they were one of the pioneers in the industry for that. And so after I moved on from there, I was a consultant for a while. And I got lucky because several merchant cash advance companies and other companies hired me on a consulting basis to train their teams, to help build origination strategies and stuff like that. So a lot of people hired me on a consulting basis, and I was doing that for 2 or 3 years, which brought us to where we probably did most of our business at 6th Avenue Capital starting in 2017. Right? So I joined 6th Avenue Capital as an important person from a mirror merchant, was on a senior level there, and was there from 2017 to March 2020, and unfortunately, we were a victim of the pandemic and closing doors in July 2020. But, I was fortunate to go there and, again, continue to learn the industry from the funding side, and had the good opportunity to work with mom and pop and other high-level, brokers and partners out there. They'll be able to continue what I was doing. So I was lucky. I was able to experience the business as a broker, as a funder, and as a consultant. After my time at 6th Avenue Capital, I actually spent 4 years primarily in the broker training space, similar to what you were doing, a little bit different. But, I was working with a lot of people who would come into the industry and were looking not only to learn working capital, but commercial real estate, and launch out a little bit of a different end. So I spent probably 6 years of my career training and working with new brokers. I've helped launch 4 merchant cash advance companies over the years. And I've continued, and now, I'm still on the consulting basis. I'm working where, I still manage a small fund, a merchant cash advance that we directly fund. and still work with a couple of other providers of capital out there. One of them I spent almost a year with from 2024 to mid 2025, helping take them from a broker to a full funder. So I've had the good fortune of being able to experience almost every aspect of the merchant cash advance working capital life. And
It's
yeah,
one of the main reason it's one of the main reasons, quite frankly, why I've enjoyed my relationship with you so much over the years is that you know every aspect of the industry. And so whenever I needed to pick someone's brain, yours was a natural for me, for sure.
appreciate
So
that.
I want to
Yeah, and
ask you a
listen,
question.
vice versa. You've been a good sounding board for me when I've needed advice on certain things. So it's
It's
certainly
funny, isn't it? We've never met one another. I actually don't think I've ever seen your face
about that.
until today. Have you seen mine?
I have.
In
Yes,
video. In
in video.
video.
In video.
Yeah, but other than that, not like this, right?
No, sir.
Yeah. It's nice to see your face, by the way.
Same
I
here.
mean, think about it, brother. We have never had words, and we've been friends now going on almost 15 years.
Yeah.
It's crazy when you talk about the word remote, you know. Most of my friends, by the way, are remote. They just live in
Most
that
of my
world
friends in this,
nowadays.
I probably have met maybe 25% of my friends in this industry are people that I've worked with over the years, you know? But listen, that's what's good about this industry. It's what's good about technology. It's what's good about the conferences. The people that I have met have been at a lot of the conferences. So listen, we've had a good relationship from day one. And listen, the way that I look at things is you can make this a difficult industry if you want, right? You can do a lot of things to make life difficult for yourself in this industry. But if you do things right, even if you do things right, you're still going to have people say things about you. And I almost joke, it's like if somebody doesn't have at least one bad thing to say about you, maybe you haven't funded enough deals.
Yeah,
Right?
amen. Yeah, yeah, yeah.
So, some people, even when you help them, you're going to get some negative reviews on there. But again, I've had the good fortune of lasting, what, 18 years in this industry and still going a little bit more on my own terms now, but still enjoying it. And I still enjoy seeing people who I helped start out in this industry, starting big companies that are doing great.
Now, we started 2026 off with a change. It's funny because when I was in the mortgage industry, we would change our 1003, 1008, the application sometimes every quarter. But in this industry, we have not changed our application since 2009.
Mhm.
Now, remember, Gary, back then that you had to put in the average ticket size. You had to put everything in credit card processing related. Not only that, but you also had to put in something that we removed. We not only removed that this year for 2026 off the application, but we removed the landlord portion of this. And I wanted to take you back to memory lane.
Mhm.
Do you remember one day out of the blue, you and I are going along, and all of a sudden, they're no longer going out to meet a landlord or need to talk to a landlord. They're actually sending the customer or us a link on a phone that we could send to the customer. And all they got to do is take a picture or some pictures. And remember that transition from landlord to that?
Yeah, it's funny you say that because when I first started, there were actual companies that specifically did site visits, not just for merchant cash advance.
Yes.
It might be more for commercial real estate. There were companies, and then you're right. Then probably about a year or two into when I was working, it transitioned to a more remote service where there was a video people can take. And you know what a lot of people started to do when FaceTime became available? They would just have the merchant connect with the underwriter via FaceTime and walk around just to make sure that, hey, yeah, this is actually a restaurant
Yeah.
or this is actually what that is. And
Yeah.
yeah, I mean, for the most part, the landlord verification part has gone away unless there's some type of concern there. They may want to see a lease. So the documentation requirements have changed over the years, and you're right, that is one of the major changes from 15 years ago to now.
Well, you remember every funding company in the industry had its max loan amount at 150. It
Pretty
was a
close. Yeah.
riot.
Yeah, it's about right.
And
And
what's funny is when we entered the industry, my attorney and I and my processor, we decided we were going to copy a group that was the company they owned prior to Yellowstone, Isaac Stern
mhm,
and God, what's his name? They made the movie Boiler Room after him. Anyway,
mhm.
um, but at that time, they would go out to 220, 440, 500,000, and all of a sudden they went up to $4 million, and we followed suit, and they got bit by a group for $4 million. It was a big article for years called "The Mob Got Them for $4 million." Well, by God, if I didn't get hit with back-to-back syndicated deals of $4 million each quietly, didn't say a word to the industry, and that's when we lowered our loan amount back down to a quarter
Yeah.
of a million, and then have just crept up since then back
Well,
to $1 million. But
and you know what happened, I think, right? When we first got into the industry, the amount that you would advance somebody was a percentage of their credit card receipts.
that's right.
And
That's right.
when the collection method changed to ACH, every deposit type was taken into consideration when making an offer. So it wasn't just credit card
So
receipts,
wire
whatever it was.
transfers,
Yeah.
credit card processing, cash,
Checks.
anything that was deposited, they were taking a percentage of that at the end of the day. If it was $1,000 and they were taking 3% of it,
Yeah.
or we were taking 3% of it, then
Whatever it
that's what
was.
we took that day. Yep.
So what that did too, when it got into the industry, it was almost 100% B2C customers, right? Restaurants, retail, people who are heavy credit card users. What the ability to collect out of the account via ACH out of somebody's business bank account rather than just a credit card opened it up to business companies, opened it up to so many other industries that were not necessarily as credit card dependent. And from there, you just saw the industry explode.
Amen. I agree 100%. In
Yeah.
fact, I can remember my staff and I syndicating deals or taking deals on our own, and someone would disappear on us in a default and then open up 4 months later, and that MID number, next thing you know, merchant ID number was transferring money into our US bank account. We were fine again.
Yeah.
And the customer thought that they were able to get away from us, never realizing that we were following that merchant ID number.
Well,
So
here's the way I look at it. If a merchant wants to default, or if the merchant wants to do things, they can, at that point, they would put a second or third credit card terminal, right? That where they
sure,
wouldn't, or they would open up another
sure.
bank account, or and that still happens to this day.
Yeah.
So, you know, one of the ways that people collected, was through a confession of judgment, which is really no longer used because of the way that it was weaponized by some companies out there as a way to really collect money from people. Now, I'm not arguing the effectiveness of it because it was effective, but the way that it was used by a few people in the industry is really what has given parts of this industry a bad reputation because of the aggressive collection tactics. Because if you take this industry and look at it, the way that I look at it is, listen, we are providing capital in a unsecured, quick way to people who ordinarily would not have access to capital. Right? So what I tell people to this day is the same thing I told people 15 years ago. If the speed and availability of the capital is what's of primary importance to you and not the term in the cost, because you're going to use this to take advantage of an opportunity, then it's good. If you're going to use this to keep the lights on, right, and catch up on back rent, then it's not going to be used very well. So I think that people and smart brokers out there and smart people in this industry, the hardest thing to do is attach value to expensive money, right? So, I think that's one of the reasons why, listen, maybe I don't fund as much as a lot of other people out there, but my portfolio performs extremely well, right? I have a lot of repeat customers. Even now, my renewal percentage is extremely high in this world of stacking, because when you're talking to people and you're explaining to them the proper use of this, I think that people get it. Hey, this is not permanent working capital. This is a temporary solution to take advantage of something, right? And that's the way that I continue to approach it to this day.
Well, statistically for us, 98.67% of our people take 4.1 more loans once they take one. And that loyalty, I think, has to do with just the familiarity of the fact they've already been with you.
Yeah.
Why would they take a chance elsewhere? You know, now
Yeah, and
you're
that
in my, go ahead.
yeah, I'll say, those renewal amounts are still high, so you're doing a good job keeping keeping in touch with your customers, because and nowadays there's a lot of funders out there saying that their renewal books are 30, 20, 30, 40% instead of when I first started, it was something like in the mid 70s, you know? So,
Well, what you're talking about, you and I know that a high portion of the people in this industry think that one loan is going to feed them the rest of their
yeah.
lives, and they live in a wham bam thank you ma'am environment, and they don't give a damn about the merchant. All they give a damn about is, did I get my money? And that's it. I hate to say it, but that's the true mindset of
Yeah.
most ISOs.
There are a lot of brokers out there who treat this in a mercenary way, right? I'm gonna
There you
fund it.
go.
I am gonna fund them before anybody else does, and I'm gonna put the 3 or 4 or 5 positions on, because if I don't, somebody else is. And while there might be an element of truth to that, the thing is you're not necessarily aligning yourself with the value proposition of the people who extended these advances, right? Because say somebody gets $300,000, right? And and then 6 weeks later, you're putting another 100 and then 50 and then 30 and then 20, and these people can't pay it back. The original funder is gonna be out there $300,000, and you may very well burn a relationship there. So, the
Yeah,
growth thing.
they develop a relationship real quick. I mean, you remember Sixth Avenue Capital with us. 100% of all deals that we did with you guys was a first look file. I
Yeah,
mean, every loan amount was 165,000 to 310,000 bucks. I was looking at it about an hour ago, you know.
yeah, and
I mean,
Sixth Avenue Capital specialize in first positions, probably 2/3 of the business, maybe 25% of it was second positions, and in very rare circumstances would the company do past the second position.
well, what's funny, Gary, we're a very rare company from the standpoint that I don't teach anyone about a UCC filing. In fact, I probably can go 2 and 3 and 4 weeks without mentioning what one is in the first week of training.
Mhm.
They always hear about it in the second or third week, but we don't chase UCC filings. In fact, my whole thing is every bit as much, you know, they call these, small business loans as an example.
Mhm.
You hear that term. I mean, we get bank statements in that are 5 and 10 and 15 and $20 million. That's not a small business in my mind.
No,
That's a middle-sized business,
y
non-publicly traded. But what's funny is talking to those people is easier. Like we use primarily for that the black envelope, which if
Uh-huh.
Gary Lockwood were in charge of purchasing at Redaway Trucking, we would know that through our database. We just send that directly into you as the CFO, and you're looking for money all day as a CFO in this economy, you know? And the funny part about trucking and a lot of these companies, restaurant, hospitality, is that they've received a bank loan of some type more than likely, but on top of it, they need additional capital and they need the freedom because the problem is these banks, you came from the commercial lending
Mhm.
industry, is they've locked up some sort of security, whether it be the mortgage, their commercial home, a boat, a plane, cars, their trucks for their business. And so we come along and it's not really an industry second, but it is a second loan. Back in the olden days, a UCC filing back in the 90s, you would not have been able to get a loan,
True.
either a second loan. You were locked up with that lender. I mean, now a
It
UCC filing doesn't mean a damn thing,
yeah, and
you
it's
know?
interesting you bring that up, Brett, because I got a lot of people asking me, "Do you file UCCs?" And the truth is, in many cases or most cases, yes. But the industry now, a lot of people, these companies that are doing 5, $10 million are coming to merchant cash advance for several reasons. A, they're maxed out on their current lines. B, and they can't get any more, so they look for a temporary bridge. Because the way that merchant cash advance is truly written is a purchase and sale of future receivables, not a loan, right? Does not technically show up as debt on a balance sheet, right? Because it's not a loan. So it
Yep.
doesn't really affect those different things. So a lot of people are coming to us for, like, venture capitalists come to me. I've been doing a deal for a venture capitalist company. They do internet. It's an international media company where they specialize in golf tours in Europe. And I don't remember the whole thing. It's been a while since I've been to them. And they come to that because it's non-dilutive capital for them. They put the money in and it doesn't dilute. They take money from us and it's more expensive, but it's not dilutive, right? So
Yep.
there's a lot of different ways that companies are using this money. If you know how to position it, you can find better borrowers out there, merchants out there. I want to make sure I refer to them as merchants. You can find better merchants out there. You can find better companies to use this if you are looking in the right places. So UCC filings, while we take a look at it, unless there was like 6 in a month where that shows me that there was a problem, it does not overly factor into an underwriting decision. I'm not saying it doesn't ever, it doesn't always,
Yeah. Yeah. Yeah.
you know?
Yeah.
So it's interesting that the different companies using our money now are higher level companies than before, right? So I'll give you an example. Like if the factoring companies would like to put merchant cash advance out of business, right? They
Yeah.
don't like it for
Always.
a good
Always. Yeah.
yeah. So, that's how the tax protection flow is partially enacted, it looks like, that you have to secure a first lien position. But I've worked with so many factors because if you just educate them a little bit and talk to them and say, "Hey, listen, I'll subordinate to you." That right there has helped me continually get business from factors over the years because I said, "I'll subordinate to you. I'm not pulling on the same sales you are. You're pulling from their invoices. I'm pulling from the cash flow out of things." So there's a lot of ways if you're a broker out there and you want to position yourself as an expert, if you try to just compete on the highest dollar amount with the lowest cost at the longest term, then you're making this product a commodity, and you're only going to win in certain cases. If you know how to position this product in a way to good customers out there, you're gonna get better performance out there, and you're gonna get more you're gonna run a much more efficient book, and it close a lot more of your pleas. When I'm training people, I spend a lot of time on this.
When I was in production full time in 2007, 8, and 9, I probably did at least 50 advances a month
Mhm.
through Orange Factor, a company out here on the West Coast that's expanded since then profusely. And that was my mindset with them is, "Hey, we're not competition for you at all."
Yeah.
In fact, to be honest with you, if anything, we're adding value to you from the standpoint that, they're gonna continue to go with you because they've got us in the background. And, I mean, a a company like any type of receivable company, like a trucking company or
Mhm.
a credit card processing company that uses them, you know, once they've got them, they seem to have them for good unless the customer service is poor. You know,
Well,
that's the thing, Gary, that I am convinced. It's one of the reasons why I wanted you and Robert Sincere to be my first two guests is that I believe your level of customer service is as good, if not better than mine, and I believe mine's as good as it can get for this industry. And that in and of itself has made all the difference in holding on to clients, landing clients, getting referrals. I'm sure
yeah,
you can speak
I
to that.
appreciate that, and listen, you've set the bar high, so I appreciate you saying that. So I do listen, customer service is I get back to people. I've been in this industry long enough that while I don't like uncomfortable conversations, I'm used to having them and being able to tell people, "Well, hey, I'm sorry we weren't able to extend an approval to you. Here are the reasons why. Here's what you may look to do." I had a conversation with somebody I know very well last week who I've done this twice, and they're running into trouble. And they did a couple of things that they really should not have done out of desperation. And I said, listen, here's what you could do to help yourself. But if you continue to go down this road, I can't, I'm not, A, I'm not giving you any more money. And B, I'm not going to really be able to help you because he called me literally Thursday and the world was on fire. And a
Yeah,
week ago,
yeah.
we did fine. And I'm like, okay, let's just calm down and tell me what happened. Well, here's what we did, and here's what we did. And they're a big company, and they got receivables, and they got this, and they got that, and they're a big company out there, and you know, and I was just like, all right, here's how I can help you get out of this. But if you're gonna go to somebody else at this point, it's gonna do is make things worse, you know. So, it's really us keeping on top of people and just telling them if you need something else or you run into trouble, reach out to the person who got this for you originally.
So, Gary, although you've never been an underwriter, and
No.
I've never been an underwriter, but I've worked in my underwriting rooms with my staff. I'm sure you've worked with underwriters too.
Oh, yeah.
There's no doubt that it's bled off on both of us, and we know what we're looking for on a bank statement.
Mhm.
So, would you mind going over what you see typically, what you're looking for typically in a business owner's bank account? What you're
It's in
looking at?
it's interesting you say that because now there are 4 things instead of 3 that I used to look at. The first thing that I take a look at is what are the net deposits into the account, right? Because that is the baseline amount. You average that out over a couple of months, and that is the baseline amount by which, by and large, an underwriter is going to be able to offer the maximum amount. Somebody's doing
Can you
$1,000,000.
explain if I had a personal business or a personal bank account
Yeah.
and I had 5 grand come into my account last month in January, is that my net deposit amount, 5 grand?
Well, it's whatever shows into your business bank account as a deposit. So
Thank
that's
you.
just one component, right? So where it says
Yep.
deposit and additions or other additions, we take into consideration every deposit that came in. And the things that we take out are any line of credit draws, any return checks. Because what's interesting, if somebody had 10 bounce checks for $10,000, that gets put back into deposits. So it looks like it
Yes.
initially. So you take a look at that and say they're doing $100,000 a month. So let's say my baseline is okay, I can look to advance this customer up to $100,000. Here's the second thing I look at. I look in their bank statements to see if they have any current debits on either a daily or weekly basis from an advance company. And the way that you recognize this, it's typically the same amount every day or every week.
That's right.
That's important, right? Because
Yep.
then if they've got 4 of them, I'm probably not going to give them a fifth. If they have 1, maybe I'll give them a second. Right? So you take a look at that. And then the last thing I take a look at is the average daily balances. So what does that tell me? That tells me that's essentially cash flow analysis, affordability. If somebody's keeping $10,000 a day in the bank, then I can get them close to that $100,000. If they're keeping 100, I'm not going to be able to do anything. There's no cash left to service debt. And even though I'm not an underwriter, I did go through a 3-month underwriting training at one of the banks I worked at. So, I know how to read financials. I know how to read this stuff, but this is a different underwriting. So when you're looking at bank statements, that's the thing I look for. And I said there's one more thing. The prevalence of fraudulent bank statements that come through now are, when I tell you I see them weekly, fraudulent bank statements. It's either they're making up the numbers or it's a complete, the numbers don't carry over. So that's something you really have to have looked at a lot, where the font looks off or the numbers don't match. Or it just looks like, hey, this company's in New York. Why are all their deposits coming from an ATM in Michigan? It's things like that experience tells you. So I take a look at that. I try to set a reasonable expectation for the broker. Hey, you know what? Based on all of this, this is what I think we can do. The things we don't know are credit, which determines pricing and terms. Right. So that's when I'm taking a look at a deal. I do my underwriting, if you want to call it that. Right. I do some type of analysis that allows me to take a look at it. And sometimes I'm right, sometimes I'm wrong. But I'm
So
more.
number of deposits. Are number of deposits important to you?
Yeah, and I'm glad you brought that up. It is, and I'll tell you why. Because say you're a construction company that gets one deposit a month for $200,000 a month on the first of the month. Right? You're going to have a ton of money from the 1st to the 15th. Then your average daily balances are going to go down. The reason underwriters or funders like consistency of deposits, it's because they want to see money coming in every single day to make sure that the average daily balances are high enough to cover the payments that they're proposing. Yeah, so number of deposits, thank you for bringing that up, is as important as anything else that I discussed.
Well, that's why when I was in production full time, my brother-in-law, about 4 months in 2007, started working for an elevator repair company.
Mm-hmm.
And by God, if I didn't meet this guy that wanted an advance through a elevator repair company,
Mm-hmm.
and it took me, back then, you remember, stuff took 10 days, 7 to 10 days,
A week,
right?
yeah.
Pretty normal. Way faster than commercial banking and mortgages. So you and I loved it. We didn't care. We loved it.
Yeah.
But as I got this education, it became obvious to me. It was like, well, for Christ's sake, they're on an annualized contract. In fact, elevator repair companies are actually on a 5-year contract. Once it gets down to the 3rd year of 5 years, it is mandatory they're in negotiations. And if they're not done by the 4th year, that 5th year is retroactively grandfathered in, and they're now back on that old contract, because the bottom line is you've got to be able to get that person out of that elevator in a reasonable amount of time, as opposed to you and I, calling on a phone looking for the best price to get somebody out of the elevator.
Yeah.
And so I started to say to myself, well, as underwriter, we love, like you and I just love, the industry loves consistency to include numbers of deposits. So I went after high rises that had elevators, and in addition, window washing companies. And the funny thing is, I bet you dollars to donuts that you probably haven't seen a lot of elevator and window washing companies over the years.
Likely, I'm sure I've seen a handful, but I can't say that I've seen many.
Yeah, it's just very few people, and I bring it up in training all the time. It's funny because until you explore and find your own niche, oftentimes
Mhm.
you're unwilling to accept someone else's. And for me, I've always been one that has a mindset like 3M where I don't want to invent stuff. I just like to make stuff better. And, there
Well,
was so
that's what
much
this
for.
industry is all about. Nobody's really inventing anything new in this industry right now, right? It's kind of all building on what everybody else did, but there are a lot of smart people, and believe it or not, there is a lot of smart money chasing this well, I'll call it an asset class now, because a lot
Yeah,
of companies
yeah.
out there are looking at this as an investable asset class, you know? Now I may
Well,
not put those terms right, but that's what it functionally looks like.
what's going to happen with this industry is there's some people that have cut the margins out of what an ISO can make.
Mhm.
But the way that they're going to offset this from my perspective, and it's been going on since I came in the industry. I mean, I remember Steve or Isaac or, um, God, I could give you a bunch of names. I
Mhm.
just off the top of my head can't remember. Over at Yellowstone, I remember them on the phone on the 29th day on a loan that was a 30-day call, and they're renewing it. I mean, it's so funny because here I am going up against 30 and 60, and at the most 90-day advances
Yeah,
with 10-month terms, and it's like, how can you not sell this?
yeah.
This is the easiest sale on the face of the planet, you know? But yeah, I lost a client, it's a real good friend of mine out of Portland named Ozumano Travel, who was really great friends with Phil Knight of Nike, the founder of
Mhm.
Nike, and Tiger Woods, and he was paying almost $170,000 a week to Yellowstone when I
Wow.
found him. He had 23 different levels of MCAs with Yellowstone. And I mean, it's no wonder they had the fine they did and had the problem they had is they just couldn't leave these people alone, you
Well,
know? And
I
and the
think that
worst the worst part about it, if I may, Gary, without
yes.
interrupting you, I apologize,
Yeah,
is they would take this investor here who was in there first,
yeah.
who happened to be, a close family member or friend, and then they would take another investor and put him or her or them in front of this person, and then another and another and another. And, you know, I look back at this person, it's like, you gotta be kidding me. I mean, I remember talking to Andrew McDonald over there thinking to myself, you can't do this. My God, you're going to put these people out of business. Well, shit. What comes on then, Gary, of all things? You and I remember like it was yesterday? The COJ. Remember that?
Yeah, I lost you for a second, Brett, I apologize. Could I ask you to repeat that?
Right there, what came out was the COJ. Remember
Yeah, we were
that?
talking about that, and I think that's what got companies into trouble. If you wanna use Yellowstone as an example, I wouldn't speak specifically
Especially
to them.
Those New Yorkers. Yeah. Yeah.
There were a lot of companies out there who did weaponize the collection method, the COJ as a collection method, that's true, and it did shine a very negative light on the industry in some cases, well deserved, and in some cases not, but, as you see now, it's not been outlawed, but it's not being used.
It's not a legal product if it's brought
Yeah.
into court. It's just not. You know.
So,
One
it's
of the
been
things that I
mm,
one of the things that I think is going to happen, Gary, is because bigger money's coming in here. I mean, you've got over at Merchant Marketplace, you've got
yeah.
Loan Broker Network, you've got Kevin Harrington of Shark Tank that's come in, and what's going to happen? I know what's going to happen. I saw it happen in the mortgage industry. Is they're going to elongate these advances. and we're gonna start to go out to 24 and 36 and 48 months,
I
and
mean, there are several
the
providers that are doing 15, 18 months and now a little bit longer now too. Yeah.
yeah,
Well,
but
that was
but
never the case when I first started. 10 months was a long advance at that point.
what I see happening with this in a perfect world is, what I do is I take shares in your company, and we could do it in a decreasing manner where as you paid me back, the percentage of the company I owned goes down. Like a decreasing life insurance policy on a mortgage, the more you pay the mortgage back, the more, the loan amount or the amount that you get paid in the
I
event of a
think that
death
there are a
goes.
lot of smart people that could potentially, get an idea like that to market where once somebody starts using it, a lot of other people will catch on. But a lot of people don't want to be the first one in the pool when it comes to new things in this industry. You know what I mean? They just want to keep buying, recycling the same leads and funding the same people. And it's easier to fund somebody who has had this before than somebody who has never taken it advantage. That's why there are a lot of companies out there who don't want to fund first position advances.
Well,
They
we're
just
not
see
we're not used we're not used to that. In fact, I got to tell you, Gary, Robert Sinclair, who I'm going to have on tomorrow,
uh,
you get a chance to listen to that podcast, works at Velocity. And I don't know if you know much about Velocity, but
I
what
know that they're a good
Velocity?
company. They're a good company in the market. Mhm.
Great company. And I got to tell you something. The thing about Velocity that caught us off guard, which we were not used to, is they want nothing to do with the first. And in my mind, we've just come to really recognize in this last year and a half, that their mindset is, hey, if someone is paid back on time without any issues for the last 8 months, 10 months, a year, you
Mhm.
know, they're going to be the type that's going to end up paying the second back, no problem, you know, which
Yeah.
kind of goes to that mindset of looking at a credit report and saying, hey, if they're making their mortgage and they're making their car payments, come on, they're going to be making they're the type of people that care,
Well,
and they're not late on things.
there are a lot of successful companies out there who have adopted exactly what Velocity does, and I can't speak to Velocity in any detail because, well, I know that they're a good company. I don't know them very well, or have much experience in funding with them, but I know they're well respected and they've done very well. That their model is, I'm only going to fund people who have some previous repayment history, right? So that they're used to the daily or weekly payments, and they're not going to shut us off after 3 weeks or something.
Now, what's your feeling on data merch?
Well, I think data merge, it's a double-edged sword, right? Because I
There you
think
go.
by and large,
Say that again, will you?
I think it's a
Say that
double-edged
again.
sword, right? Because I
So,
think data merge has truly prevented people from getting funded who have defaulted either in a reasonable way or an unreasonable way, because there's an ethical way to default. You may just go out of business for
yeah,
whatever,
yeah.
right? Or an unethical way where people are just taking the money. But so I think it's any company that I would say this, any company that I do consulting for, one of the first things I have them sign up for is data merge. Because you know what, if you don't, you're not going to know if they burned other merchant cash advance companies, right? So that there. But also, funders can use it in a way where they put people on there who shouldn't necessarily be on there so that no other funders will fund them. Right? So we'll go to somebody and say, "Hey, listen, you're on this default database. Like, what are you talking about? I've only had one advance. I've only missed one payment over a year. I don't know why they have them on there." So funders may have the right to put people on there, but they do it in a way where it's almost a retention tool. So other funders won't fund the people that they want to continue to fund.
I agree with you 100%. I started to see that as a tactic they were using to keep you and I out of there.
Yep.
And and say, hey, I'm not going to lend to this business owner, you know, they've got these issues, when in all honesty, they didn't have any issues at all. In fact,
Sure.
what I see happening is that at some point they're going to be forced into, rather than you just filling out a form, there's actually going to be a legal document that's going to have to be presented, because that it's kind of like decision logic. One of the things I've seen with decision logic is that they've done an unbelievable job of transitioning, where they could have been left behind a long time ago.
You're
I don't
glitching there
know.
just for a
Did
second,
I
Brett. We
lose
can't
you?
hear you.
I think I lost you, Gary.
Brett, just to let you know, we lost you there.
Hold on, folks. Let's see what's going on here. Give me a minute. You should be back. Are
Yeah,
you
you're
back?
back. You're back now. We lost you for
Yeah. Yeah.
about 15 seconds.
Yeah. So anyway, I was talking about decision
Danimer,
logic
I'm
and
super glad.
how they've made the changes over the years and really have. It's kind of like one of my favorite people out there, Sean Murray at DeBanked. You know, when I first met Sean Murray, I said to myself, I said, you know, I'm going to let him have this product, but if he doesn't do a good job with this product, I'm going to bring an industry index out. Well, I could tell you what, Sean Murray and his team have done an unbelievable job over at DeBanked. I mean, they
I think
just
they've done a
everything.
brilliant job.
Yeah,
I've had
yeah.
the pleasure of meeting him a few times. I think that they're the premier advocacy group in the industry when it comes to
Yeah.
education, advocacy, doing things the right way. And for me, I'm glad that someone like Sean is in this industry, who is, who is professional and does things the way he does, and his conferences are good. Everything he does is quality.
Well, he's a prime example of all these niches that are available within this industry. And that's another niche or niche that, you know, one of the primary reasons why he holds that position as number one is because not that nobody thought of it. It was because he worked it every day and he molded it like a piece of clay. You know, I try to explain that in class oftentimes to a lot of the new people. It's like, look, man, anybody can be successful at this, but the bottom line is you're not going to be successful at this if you're just a sometimer. You know, you got to put in the effort. And Sean's done that. He's done an amazing job
And
of doing that.
again, I can't say that I know him that well. I've met him a couple times. I think he's done a brilliant job. I couldn't imagine anybody doing a much better job than he has done.
But you've seen the quality of the product, like me, go up like mad.
Oh
For
yeah, I
sure,
mean,
right?
absolutely.
Yeah. So
Yeah, let
as
me ask
far
you. I
as
want to
we,
ask you. I'm sorry. Go
go
ahead.
ahead. No,
I
go
want to
ahead.
ask you a question. So a lot of people come to me now because I did have a product that addressed this for MCA payouts, MCA consolidations programs out
Yep,
there.
I remember. I
What
remember
is
those
your
came out.
thought? Yeah, and listen, I did a fair amount of that business last year. What's your opinion on that? And a lot of times, believe it or not, it's fun. There's calling me, asking me to get them out of these trouble deals.
Oh
So you
yeah,
would
me
think,
too.
you would think that it's the MCA industry doesn't like it. 40% of my business came from funders saying, "Hey, can you help me get out of this difficult deal?" So what's your thought on that? Because I've shifted my thought on that somewhat. So what's your thought on the MCA consolidation industry?
Well, I think that there's a necessary evil there that has to be
Yeah.
in the industry, and you know that there are too many people that truthfully don't know what they're getting themselves into,
Yeah, I agree with
and
that.
and you know, I don't believe for one moment at all that someone talked them into it. I think they saw it as an opportunity to inject the heroin in their arm. They got their 18,000 or 232,000, and they thought that everything was going to be okay. And then
I
one
could
day
not
they
agree
woke
with you
up.
more, by
Yeah.
the way, because I
And
get
then
people
one,
calling.
because Gary, without interrupting you, I apologize.
Yeah,
I believe that everybody intends to pay these back. No different than you and I when we take out a
yeah,
loan. But then something happens, whether it's health related or you lose a chef and you lose the entire team
yeah.
in New York and the menu. And now, you got to go find, you've got a business. You've been in business 27 years. This is a common denominator I've seen in New York and Florida over the years, North Carolina, where okay,
Yeah.
Chicago, Atlanta, where now, okay, we've got to find a new chef. They're going to bring in their own menu, and it's going to be a 2-month transition or a 1-month transition. They're going to be fine. They're going to be fine. And I see that something happening with us and the industry that I love more than anything is
Mhm.
less and less penalization and more willingness to add a month to the end of the contract or a week or two to the end of the contract, rather than immediately sending out letters from
Yeah.
attorneys, and that's
Brett, you make a
that's
very
what
good
gave.
point there. Yeah, you make
What's
a good
that?
point there. You make a very good point there, if you don't mind my saying, because I've seen a lot of funders who in the past may have been more willing to push something into collections. Now they're saying, okay, let me just stretch this out another month or two. You're right about that. There are a lot
I
more
won't
funders
let
doing.
I won't let my attorneys on the phone. I won't
Yeah,
let my collection department that we used to have is gone. And
yeah,
the way we operate is it's a nice call. If a guy's name is Gary Lockwood, it's just, hey, it's nonchalant. It's first name basis only. Hey, Gary. And they're always avoiding whoever,
yeah.
everyone at that point. Hey, Gary, this is John. This is Bret with Mom and Pop Business Funding. Something must have happened with your business because make no mistake about it, we're sure that you wanted to pay this back when you first started. Why don't you take a week or two off? Give us a yell in between then, and let's see if we can't get you back on payments when you get back on your feet. Something must have happened to your roof or you lost a key employee.
Yeah.
And interestingly enough, over 93% of the time, in less than 24 hours, sure enough, there's the phone call. And it's one of those isolated instances. You know, my wife left, my partner left, my husband left, whatever it
Yeah.
is, a chef left. And, you know, but the key is it's like hostage negotiation. I mean, there's times, I'm sitting on 70, 80, $100 million out there. It's like, hey, man, don't you walk away from this money by sending some dirty letter to somebody. You
Yeah.
know, it's just not, and the the more that I push you or the more you push me, if I'm late on my Ford Motor Credit payment, the more apt I am to say, you know what? Fuck you.
Bankruptcy. Yeah, bankruptcy, and I'm
Yeah.
just gonna. Yep. Yeah,
Yeah.
and so the
And
merchant advance consolidation part, I just want to talk about it for a minute. The reason so many people come and say it makes sense. They're paying $30,000 a month for this advance. You could stretch it out for 5 years and cut the payments by 60%.
yep.
And I say, you know what? All true, but here's the problem, and why you got to kind of the same people who bother me to consolidate it or really push to consolidate these come back a month or 2 or 3 later and start loading these people up with the type of funding that got them in trouble in the first place. That is the reason why a lot of places don't want to consolidate these advances,
Well,
because
Gary,
they come right back.
when you hear Trump's group talking about 50-year mortgages, I was in the mortgage industry in
Yeah,
2000 when Bank of America brought out a 50-year amortization loan,
yep,
amortized loan, but it had a 10-year call on it. So what I've always said to myself in this industry is they're going to come out with a 10-year amortization, 120 months, but they're going to have a 1-year call on it. And now
so
you
the people
hold
get
the
their way.
renewal. Now
Yeah,
you get the renewal, right? And
that's an
so
interesting way
it
to look
gives
at it,
him
yeah,
it gives him way less payment daily, weekly, or twice a month, or even monthly.
Yeah.
And now you're not hurting the business owner. I mean, look, brother, you and I know that if you look at a business and you see they've been in business 29 years, they're not going anywhere versus 29 months, you
Yep.
know?
Agreed.
And you're not taking a risk with that person. And then the other thing that they're really missing the mark on in this industry, which happened to us in the mortgage industry in the 90s, was we brought out mortgage insurance and we brought out disability insurance.
Oh,
And that was
okay.
a whole nother way to add to make a little more commission, make a little
Yeah.
more money for the
Well,
company,
to secure
you
the loan
know?
too. Yeah.
Yeah, and you secure the loan, absolutely. And it's funny, what here's what I see in this industry is there's always seems to be a group that wants to drag this back to, hey, I've got $1 million. I want all my money churned back into my account in 90 days, 100 and, 110 days, 120 days or less.
Oh, there's plenty of
And
money chasing that kind of paper. Absolutely.
yeah, and so I've always said to myself, well, I want to be, you know, associated with more of a hybrid of that. I've always looked at our company and said, I don't want because our policy is we don't have clawbacks.
Yeah.
And
That is
we
a
may
I don't know how big a benefit that the people that you're training know that that is. You can absorb it.
they don't know, Gary. They don't know until they leave and they go date another company and then all of a sudden they get, you know, 10, 20, 30, 40 grand clawed back and
Yeah.
now they're back at our company. But the bad thing is we've got a good enough reputation. We get an email if someone's on the run and then we
Yeah.
just don't bring them onto our platform. You with me?
I am. Yep. That's good.
Yeah.
So I think this is an interesting industry. And the only thing I would say for new broker, a lot of new, like my favorite thing to do in this industry also is to work with new brokers. A, they're not unlearning any bad habits. They're eager to learn. And this is a very good way to get to know the alternative funding industry. You may go from this to wanting to fund equipment or SBA deals or something else. But there is no better way to learn the commercial finance industry than merchant cash advance because it breaks it down into very basic things that you take a look at 10 things. And if you can get that baseline of knowledge, you can have conversations with so many different business owners, business types. So, I come from a training background. I think more training is always better than less. You know that. You're a proponent of that. Been doing more training than anybody in this industry for 15 years, 18 years. And I think that these advocacy groups out there need to keep going and really can just kind of keep educating people. And listen, I hope this industry doesn't become a race to the bottom, which means, that the
Yeah, yeah.
lowest that the lowest common denominator takes over and everybody's chasing to fund the same person 6 times,
Well,
you know?
that's what they did in the credit card processing industry, and
Yeah.
they took the broker, the ISO completely out of the program, you know? I mean,
Yeah, and there's a lot to do out there. There's a lot to learn. I think what you're doing out there to bring people into this industry in a way where they are not making a significant time or financial commitment to be trained by an expert, to have the what people understand is the ongoing support that you get them and the
yeah, because
ability
you
to
and I
pay
know,
bills.
you and
Yeah,
I, Gary, that's the only reason I've kept in contact with you and the Roberts of the world is there's a handful of people that will pick up the phone. The rest of them wouldn't pick up the phone if you stuck a gun in their head.
yeah, unfortunate but true.
They're on the computer. You know that, and so do I. They're on the
Unfortunate
computer.
but true. And it's true. And listen, you need to have conversations with your people. You need to have, like, when brokers call me, I like to talk to them. I said, listen, my preferred way to communicate with you is a phone call. If you
Yeah.
like to text, if you like to email, that's fine. I'll do it whatever way you want it. But, and sometimes you got to have difficult conversations. You guys look at a or look at a file and they're like, you're doing a 200K a month is a great file. Well, a construction company that's got one deposit a month of $200,000 a month is not the same as a restaurant that's got security deposits for $200,000 a month, anywhere in between, you know? So it's, I hope people allow themselves to continue to be educated. I hope that people are smart. And when you train them, Brett Martin trains them, they stick around for a while and know the benefits that you provide. You know where to put the deals. People can end up, if they're new, to 6, 7 lenders that think they're all the same, and not know who to trust. You provide that vetting service for them. And I do the very same thing for the people who come to me.
Yeah. Yeah.
It's not just, I need to get 15 points or I'm going to go somewhere else. Okay. If you don't see the value in what we have to offer, somebody's going to come in with a better deal and steal from you, and you're going to make 0 instead of 15.
So one last thing, if I may.
Please.
You're familiar with a gentleman by the name of Juan Monegro years ago that was with Yellowstone Capital?
If it's the same person, he was considered like the highest producer in the industry, doing $20 million a month. Am I remembering that correctly?
And he
I
had a
don't know
month there where
anything else about that.
he finished 2015 with 2,351 loans. It was a big write-up on it. So that article went on to say that their average person is averaging 200 to 350 loans a month. So what I'd love to have you do, since you realize that a lot of my staff is not from this industry, I'd love to have you tell my staff of just not any names, obviously, but some of the money that some of these guys and gals are making that are big producers out there. I see your eyes raised because you and I know, and I know, but they don't know. Go ahead.
Let's say that your goal is to make $250,000 in this. I'm not saying that's a high number. I'm not saying that's a low number. For the purposes of this conversation, let's say that you want to make $250,000. You know what that is? That is one $50,000 advance a week, paying you $5,000.
One
funded deal.
Now,
funded
now
deal.
Let's add back in those renewals in 3 to 6 months.
So let's say even on a small basis, you only renew 20% of your deals. Right? So that's 10 additional deals. That's taking your comp closer to $300,000 a year by funding one average size deal a week. Now, what do you need to get? If you're going to fund one deal a week, you're going to need to produce 10, 12, 15 applications. The better you get, the less applications. So if you can break it down to that, if you can produce 50 applications a week, which is not an absurd number, Brett. You know that, right?
Yeah.
You can make $250,000 a year in this industry by funding one average deal a week. Right? And if you got people working for you, they even got independent contractors working, got people working for you. And you're going to pay them, you're going to be generous and pay them 40% of the commissions that come through. And they fund one deal a week. You're making $100,000 a year on each person that's at the desk.
We've got ISOs. We've got ISOs that live on 30, 40, 50 total deals because a high percentage of them that we're able to retain, and they just don't look at their loans until their renewals fall off enough, 10, 20, 30, 40%, that now they've got to go out and get some new deals. But, it's kind of like the olden days. I used to marvel at guys that had credit card processing. They were making money off of those companies. And, now they're not making $8,000 a month. All of a sudden they're making $6,000 a month. Now they got to go out and look for more companies to do credit card processing with, and that's the way it is with these producers when it comes to merchant cash advances.
Let me end with this if I could.
Yeah.
So believe it or not, I'm starting to work with a lot of credit card processors, and I met with a very impressive, very smart, very high-end credit card processor last week in the New York City metropolitan area, and they were looking at adding cash advance. They hadn't done it in the past. And I said to them, "Let me ask you, on a 500 on a $50,000 a month customer, what are you making in residuals? 50, $200 maybe a month? Would that seem accurate? I don't know. Let's say it's even $250. So you're making $3,000 a year. You do one advance, you're getting 18 months of the residual. So this does not, this amplifies your book. This is not. So I said, if you look at the numbers, and this is a retention tool for you. If you fund people, they're less likely to leave. You know?
Well, it's the reason why I had to laugh the other day. Someone handed in a file. This guy's doing $560,000 a month on average in deposits, and he's on Stripe. I mean, Stripe was built just like Square for some, little old lady or little old man underneath the bridge that sells Etsy products. That's what it was built for. But what Stripe does an amazing job of, just like Square and PayPal is, they hook them with one of these MCAs, and then they just keep feeding them. And they feed the shit out of them.
Let me tell you, those are the hardest people to compete with. Toast, the
That's
POS
right.
companies out there, because they are just taking it from the credit card product, and they are ahead of the money, and their defaults are very low. So it's a good thing. So here's what I say: anybody coming into this industry, align yourselves with the Brett Martins of the world. Align yourselves with your funders once you start talking to them. You don't need 50 funders out there. Get a group of 10, 15, 20 funders out there and build relationships with them. And don't act in a way, because word's going to get around. Believe it or not, there are lists out there that brokers who cheat funders out there, they are now aggregating that information, and word's going to get around. So I would say do things right.
That being said, Gary, let's have everybody have the name of your company also, please.
Sure. The name of my company is Trusted Advisor Funding. What I can do is I will get you, I'll get you my direct phone number, if that's okay, Brett.
Trusted Advisor Funding.
Yes, sir. And the phone number is, my 800 number is changing, but my phone number is 845-401-2759. I am building a beautiful new website, which I will give to Bret, that is supposed to be done by February. It's actually done now. I'm just putting some finishing touches on there. So, and what's good about that is if people want to work with me, I can allow them to use my website to process their own transactions.
Absolutely.
In a good way. So, and it's it's built with the individual smaller broker in mind, to take advantage of the scale that I have, so that you can compete with bigger brokers out there, and you be able to have access to funders that you do not have access to now. So thank you for my 30-second commercial there, Brett.
Hey, man, listen to me, brother. I mean this from the bottom of my heart. You and I know we've had some family issues together. We've had some great times. We've had some rough times with our families. But I want to tell you something, dude. Of all the people I'd like to be in the industry with for an additional 14 years, since we've been together the last 14 years, it's you, Gary. It means everything that you were the first person with me on the podcast here, and that you bared with me with the issues that we had initially. But I just want to tell you from the bottom of my heart that, I have absolutely adored my relationship with you, and I'm proud to have had you as my first guest here. Thank you so much.
Same here. Really Thank you. Listen, I appreciate the friendship, the support, the professionalism over the years. We're going to keep working together no matter what this crazy industry has to throw at us. And listen, anybody else out there that they'd like to talk,
get in touch with Bret. You can put me directly. I'm happy to talk about whatever you want to talk about. But Bret, thank you for what you've done in this industry and what you're going to continue to do up there.
Thank you so much, Gary. Have a wonderful evening. Okay, bye-bye. You bet.